Good morning and welcome back to the channel. Amateurs want to be right, professionals want to make money, and to make money, as Tom Hougaard says, you have to be the best loser. Welcome back to the channel. Today is Tuesday, July 28th, and I took a loss on AUDCAD. It hit my stop loss, it took my risk for the day, and you know what? It was a beautiful trade. Most trading channels only show you the highlight reel. The 1 to 5 risk to reward bangers where the market did exactly what they wanted. But if you want to survive in this game, especially if you're trading prop firm capital, you have to learn how to lose without it destroying your psychology. Today, we're going to walk through exactly why I took this AUDCAD setup, why it failed, and why I haven't lost a single second of sleep over it. Let's get into the charts. Let's strip away the outcome for a second and just look at the probabilities. Over the weekend, I mapped out the 4-hour points of interest on the AUDCAD. I realised I'd got an opportunity for a beautiful displacement entry on the 30-minute chart, and that is this candle here. But as you know, price action it's not always enough. So we need to see who's on the wrong side of the market, which is what I did at the time. I realised, looking at all the numbers that I had in front of me at my disposal, I had a 30-minute displacement. I had 30% on the OPRs from IG markets, and I had 38.9% on the relative OPRs. Bullish. And up here, as you can see, I know from the data that there's a 65% relative OPR correlation. So that 38% that I got meant something. When price approached my 4-hour point of interest, I looked at the relative open position ratio. We were past that critical plus or minus 35% threshold. Yeah, I'll show you this. We got 38.9%. The retail crowd was heavily leaning the wrong way, trying to catch a falling knife or prematurely shorting a rally. The trap was set. Next, I looked at the Gator. The momentum was aligning. I had my edge. I had top-down structural confluence, and I had the retail sentiment in the sweet spot. I had momentum waking up right here. I got the fractal in the right place at the right time. This wasn't a gamble. This was a highly probable setup that fits my trading plan to the letter. So I executed. I entered the trade. I used the average true range to make certain that my stop loss had enough room to breathe without exposing my prop firm account to unnecessary risk. And then price chopped about and pushed right through my stop while I was asleep. Now here's where the 90% of retail traders destroy their accounts. The moment price gets close to their stop, the pain of being wrong kicks in. They widen their stop. They remove their stop. Or, after it hits, they immediately enter a revenge trade in the opposite direction because they want to make it back right now. I didn't do any of that. When you read Tom Hougaard's Best Loser Wins, the core message is that normal human behaviour is completely incompatible with successful trading. A normal person feels pain when they lose money. A normal person wants to fight back. A professional trader accepts the risk before they click the mouse. When I clicked buy on AUDCAD, I had already mentally spent that money. That risk was the cost of doing business to see if my edge would play out this time. It didn't. Mark Douglas teaches us about probabilistic mindset, but Hougaard really drives home the emotional reality of it. I don't control the Canadian dollar. I don't control the Australian dollar. I only control my risk and my reaction. If I start tweaking my system, second-guessing the relative OPR rate or data, or getting scared to pull the trigger tomorrow because AUDCAD burned me today, I'm no longer trading my edge, I'm trading my fear instead. The strategy works. The plus or minus 35% relative OPR filter really works. The Gator works, but works doesn't mean 100% win rate. It means over a sample size of 20, 50 or 100 trades, the maths is in my favour. This AUDCAD trade is just one data point in a series of 100 trades I'll take this year. Why on earth would I let one data point ruin my day? So, what's the next step? Nothing. I update my journal. I note that the setup was flawless, the execution was flawless, and the market simply chose a different path today. I protect my capital, I protect my prop firm drawdown limits, and I wipe the chart clean. If you're struggling with taking losses, I highly recommend adopting this mindset. Stop trying to be the best analyst in the world and start trying to be the best loser. Cut them when they hit your stop. Accept the outcome and preserve your mental capital for the next 4-hour setup. And if you found this reality check helpful, drop a comment in the box below and tell me what is the hardest part about taking a loss for you. Hit the like button, subscribe if you want to see what real unfiltered day trading looks like, and I'll see you in the next market update. Have a great week, trade smart, and as my own mentor would say, I wish you happy trading.